but the US has a lot at risk here because what's the future of the US dollar? And these assets are a bit of a
100%.
shoulder tap. This is a shoulder tap. Bitcoin is a shoulder tap on central banking policy.
Hey everyone, welcome to our Trade of Black podcast. I am your host, Shad Dales. Lots of news coming down the last couple of days pertaining to banks. And are you freaking out? Are you wondering what the future is going to hold? Take a deep breath, calm down. It's not as bad as you think. It's not great, but we want to learn more. And we got two great hosts and great guests on today that'll explain as to how things got here and what we can expect next. So before we get into today's podcast, as usual, all views of the Trade of Black podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay, let's welcome in our guest of the week. He's the CEO of Ether Capital, which trades on the NEO Exchange under the ticker symbol ETHC. Brian Mosoff joins us. Good day, sir. How are you? Can you hear me? Can you hear me?
I can hear you now. The internet's going a little bit in and out. I'm assuming you welcome me. Thank you. I'm glad to be here and happy to chat all things crypto and what's happening right now in the TradFi sector.
No kidding. Interesting to see how this is going to have a ripple effect, if any at all. But Anthony Verrill, millennial entrepreneur, joins us once again. How are you? How was the weekend?
Good weekend. Get a bit of fun Monday. I was out of the country all last week. I was with you in Canada, then went down to South America. From Thursday to Sunday, but it's good.
So you went from Toronto, Canada to Colombia in a matter of 2 to 3 days. Is that right?
Yeah, back to back. As soon as I got home,
that's not a bad lifestyle. Not a
to go.
A lot of flying though.
I miss being on a plane.
A lot of flying.
Yeah.
Gotta love Colombia, that's for sure. Well, gents, let's begin. And Anthony, I'll start with you. Let's talk Silicon Valley Bank, otherwise known as SVB. Which collapsed last week. The bank had $21 billion bond portfolio consisting mostly of U.S. treasuries. However, the holding of government-backed bonds have fallen in value due to rising interest rates. So what they ended up doing was fund their clients' redemptions. SVB sold that portfolio then on Wednesday. Then on Thursday, the bank said it would sell $2.25 billion in stock to its funding hole, but their shares ended up trading down on 60% and just caused mass mayhem as far as worriness in the market. So I guess the first question, Anthony, is for newbies to understand what happened here, explain to us how we got here in the first place.
Yeah, it's pretty much just gross mismanagement by the management team of the bank. They weren't hedging out their interest rate risk on 10-year treasuries that they were using as investment vehicles for the treasury for the bank. And their liquid capital couldn't cover their deposits. Once they needed to fill that gap, they had Atlantic Capital come to the table with I think 500 mil out of the 2.5 billion that they needed to raise. They broadcasted to the market that nobody else wanted the paper in the capital raise and kind of caused a run on their bank themselves. If they kind of would have just stayed quiet or probably went to go find somebody else, either domestic or abroad, we wouldn't be in this situation. But they dedicate a lot of money to lobbying SMB regulations in their favor of loose banking efforts, and they don't fall under Glass-Steagall or Dodd-Frank with the amount of capital that they have in their doors. So this could have all been avoided. It was kind of just shoddy management, and it blows my mind that guys that are roughly managing I think 230 billion in assets aren't hedging out any interest rate risk in this environment.
Brian, you're a CEO of a company. That's pretty accurate with what Anthony said. How does something like this happen, and what was your take on it all?
I think for me, someone specifically who's not just in the capital market side, but focused on the crypto industry, just to steer the conversation a bit in that direction, this is unfortunate. This is one of the few banks that was supportive of the digital asset industry. You have a lot of companies that were using SVB for their deposits to push their companies, who needed banks, who couldn't maybe qualify at JPM or, any of the majors. So this is a big deal to have a bank like this collapse. It has ripple effects to regional banks. It's going to have a ripple effect into the crypto industry. So it's really unfortunate, and especially because we think that the whole thing could have been avoided. This is one of the problems with fractional reserve banking. It's why I'm excited about crypto, because I think we need transparency. And, this isn't about regulators and legal issues. This is about, can we replace these kind of oversights with pieces of technology, pieces of a tech stack that can automate downgrading some of the risk on various trades, various positions. Can that happen? And I think the answer is yes, and blockchain technology is really going to be at the forefront of that.
Okay, so furthering that note, will it have any, like, let's face it, cryptos, had been nothing short of like dramatic events going on for the past 6 months or so. This is the last thing it needs. But however, based on what you're saying, this could be an opportunity. Do you think this has any kind of ripple effect on the industry as a whole?
I mean, there's definitely going to be a ripple effect to the industry because the startups need a place to bank. And I think it's easy if you're not easy, but if you're Coinbase or one of the major players in the industry, you can probably get an account at one of the major banks. But what happens to the startups? What happens to all the younger players who don't have as big of cash to stick somewhere? They need to process transactions. Maybe the transactions are considered very high risk. What bank wants to touch that? And regulators right now are moving into the space. We don't necessarily have clarity. What we have is clarity through enforcement by the SEC, which is very difficult to navigate. And so what you're going to end up with is a landscape where no bank wants to touch anything to do with the sector because they just won't take on the risk. So where does that leave the space? What it probably does is just sever it and says, okay, I guess there's no rails in or out of this space, or it becomes more difficult. Yeah. But it is interesting. We were chatting just before the show started that it's interesting that crypto went up on this news. We're up about 10% today on the price of Bitcoin and ETH. And so you're seeing that people still care about these assets. This sector is not going away. It's going to be bigger. And my concern is if you cut it off, if you get rid of the rails and you don't figure out how to stuff the square peg into round hole and say, problem gone, we solved it, we cut off the banks from touching the sector, what happens in a couple of years when it's an order of magnitude bigger than it is today? Then what? The U.S. needs to lean into new technologies and lead at the forefront of finance, not push it away and say we just want it to go to a different jurisdiction because we don't want to deal with it. So that to me is the crux of the conversation that really needs to be had because burying it in the ground for a few months or a few years, I don't think is the right answer.
Yeah. Anthony, what do you think? What's that say about the industry as a whole and seeing Bitcoin rally? And what's it? I don't know what it closed at today. It was over 23,000 at one point.
It doesn't.
Sorry, my apologies.
But it's up. It's up 13%. My honest opinion is I'm fading this rally. I think that this is driven by the narrative that Powell's not going to raise rates. I don't think it has anything to do with the actual distrust of the financial system or the banks. I think Powell's still going to raise rates. He's probably going to raise 0.25 instead of 0.5. And that's coming. And I think when he does, and he telegraphs that he's not going to come off the gas pedal, I mean, this rally might get faded. I'm cautiously optimistic. I do believe that, decentralization is something that we need. Centralized finance at its core doesn't work. But in its core, crypto shouldn't have to rely on these traditional financial institutions. It's once the tech catches up, and you can actually be onboarding regular customers, and you have sophisticated payment rails that can transact all over, and you don't need these financial institutions. It'll be great. Right now, they're a necessary evil. But I don't think it's really going to propel the sector higher. If anything, it just keeps adding to the narrative that Bitcoin, that Ethereum, that these transparent, decentralized stores of value, money, whatever you want to call them, they work and they won't break like this because it's self-custodial. Unless we get back into the CEX narrative, which we've kind of beat that with a dead horse. But at its core, decentralized finance does work. And you can avoid situations like what's going on in these banks and in these centralized.
Brian, do you agree with that? It enhances the narrative for Bitcoin, Ethereum, as to what Anthony said, and if so, what do you think will be? I don't want to say there hasn't already been a turning point, but what do you think is the news or the turning point for people really to grasp on to understand that this indeed is the future, and this is indeed going to be the answer long term for the way people bank?
I think it's interesting to think about when Bitcoin first launched, January 3, 2009, there was a message embedded in the very first transaction. ever of Bitcoin. And it was the headline of a newspaper, the London Times, that said, Chancellor on the brink of second bailout for banks. And that's the birth of this whole industry, right? Bitcoin comes into existence with that message. And I think for the first 10 years, a lot of people kind of ignored, crypto was complicated. They didn't get it. They saw some price rise. Maybe it hit the media every now and then, but they mostly ignored it. Where a lot of people really started to pay attention was in that second half of 2020, where you had this narrative around COVID and people talking about inflation, and a new group of investors who weren't just the technologists wake up and said, maybe we should be paying attention to this set of assets. Maybe there's something here, because central banking, where it's kind of a finger to the wind, what is best for the economy today? And by the way, for good reason. I totally understand why the Fed does what it does. But the reality is people don't know what the monetary policy is going to be, each month or year to year. And when you have something like Bitcoin or Ether, these algorithmic monetary policies that are governed by a global group of developers and people, and I know how much Bitcoin there'll be in circulation, on a specific date in 2025, you have no idea what that will mean for USD. And so people woke up in that second half of 2020 around COVID. Yeah. And then you had that price rise up to almost 70,000 US for Bitcoin. And then you had this, big pullback in prices, but people didn't go away. The developers didn't stop building. And so even though people may currently be turned off, I think what you're seeing is, oh, here we go again. Another set of banks is failing. It's the same narrative all over again. And so again, you're going to swing that pendulum back to this set of assets and go, there's a reason why they exist. There's a reason why there was buy-in from the technologists early on and from traditional financial institutions around 2020 and 2021. And they're not going to leave. The question is just, how do they play the space? What's an appropriate entry point? Can we get clarity around regulation? But this is going to swing the pendulum back towards this asset class. It's going to harden and strengthen the narrative 100%.
Do you see big growth? Of course you do, but how much growth do we see if interest rates and inflation, we don't get this fixed in the next year or two, Anthony?
You mean inflation doesn't get under control? I mean, if inflation doesn't get under control, you're probably going to have rates sail up to between 6 and 8. And I mean, it's a high interest rate environment. I mean, crypto is still going to be able to survive, and it's going to be able to move forward from a technological aspect in a high interest rate environment. The cost of capital is just more expensive then. But I mean, as it gets more validation and as it gets built out more, the market participants are going to come in regardless of the interest rate environment. You're just not going to get massive speculation in the assets going from 1,000 to 4,000 or retesting the all-time highs. But it's moving forward whether or not rates are up or down. But I think we're going to be sitting in a moderate interest rate environment for some time now. And I mean, let's not forget, I think in the early 80s and the early 90s, interest rates were 12%, 15%. Everything was going on just fine. I mean, we do need and have operated in high interest rate environments before. We've just been in a declining interest rate environment for the past 20 years. And it's all due to unsound monetary policy that cryptos
don't think people want to see 12 to 15% interest rates, though.
No, but I mean, it's not the end of the world. Everything's not just going to fall apart because there's 10 to 12% interest rates on financing and on different
Brian,
vehicles.
I'd be interested to learn. You're CEO of a company. What are common questions? And you have a big focus in the crypto landscape right now. But I guess what are some common questions that you're fielding from investors day in and day out pertaining to the industry?
I mean, currently, I think a lot of people are still wondering, are the prices ever going to go back up? What's the best way to play the space? And one thing that, if we can call it a silver lining of a pullback in all the froth that came in the last few years in the digital asset industry is a recalibration on where is the real value? Where are the developers? Which protocols are actually shipping? Updates where there's real usage, where there's narratives forming, rather than the speculative new flavor of the month asset. And to me, focusing on just Bitcoin and ETH and kind of ignoring everything else, that's a good thing. That's going to be a healthier industry. Saying maybe the way to play this space is through something like staking. Ether Capital, we're very focused on staking, which is the ability to help secure the network and generate a yield. We earned about 5% on our treasury last year. So that's great for us, to be long an asset that we believe has tremendous upside and generate a 5% yield denominated in ETH. That's a huge deal. So I think what you're going to see is institutions start figuring out, how do they play this space? What is appropriate? What kind of products should they create? A lot of investors, of course, with everything that happened last year, are asking, do we have exposure? How do you do custody? How much reliance do you have on various counterparties? And the industry lost its way a little bit, where it's easy to rely on these centralized counterparties to say, I'm going to take my asset, I'm going to deposit it into some centralized exchange. And because they do a lot of marketing, I'm assuming that it's going to be safe and okay and nothing bad's going to happen. And then you see something like FTX that no one saw coming. Which is really unfortunate, because when you pull back the curtain, you realize, well, there was no governance, there was no board, there was no proper audits. And so people trusted them blindly. And I think that's going to wake up investors to say they need to do a harder look at who their counterparties are, to focus on diversification. Maybe they can do self-custody, meaning they don't take the assets and give them to a counterparty. They figure out how to hold the keys themselves. The assets, these are digital bearer assets if they treat it as such. And that's a big opportunity. That's what this industry stands for. And so I think there's a lot of questions. Investors are getting savvy. You're getting all of the investment banks are putting out research reports. And those research reports, by the way, are incredible. I used to be really skeptical in that 2017, 2018 era, where you would see, every now and then you would see some thought piece or research analyst put something out and you're like, it's kind of right, but there's a lot of nuance that they missed. And the
what do you think changed? What do you think changed for the research reports to be a lot more positive where they are today versus 6 years ago?
I think it's just time and a more robust industry, having more resources, and those analysts starting to be part of the industry, to attend conferences, having conferences that aren't just for crypto natives, but conferences aimed at traditional institutions that they can go, they can knowledge share, they can meet people in the industry and ask questions. This is an industry that's more robust now than ever before, and that's everything from how the assets can be stored. You can get insurance on these things. You have proper custodians emerging. You have auditors who are comfortable with the space. The missing piece now is, how do we figure out that regulatory, that last sliver of the puzzle? And that's a big one. That's an important one, is to figure out, how do you be compliant? You have good actors in North America who want to be compliant, and we need to solve for that.
Anthony, you want to add to that?
Yeah, I think it's definitely an interesting conversation around custody versus non-custody, especially when you're dealing with CEXs. Like, I was happy last week to see Coinbase's announcement of their wallet as a service. I'm hoping someone builds a wallet that's compatible with Coinbase that also gives you a self-custodial option. So you can you'll have that optionality, and it's all going to be baked into the user experience. But Brian's right; it's all predicated on the regulatory environment and what's going to happen moving forward.
So we saw some, I want to say negative, but some questionable research reports 6 years ago. But we've seen that kind of advancement in the last 6 years. So let's put on our hats where we're looking at the future. Where are we, do you think, in this overall industry, Brian, 6 years from now?
I think that this asset class is much larger. Not even 6 years from now, 2 or 3 years out. And it's important to recognize that it's not going to lean on what happens in the US. The assets are global. The developer group is global and engaged. And they don't go away. And part of my thesis has always been, just follow the developers. Every time I attend a major university, Columbia, NYU, if you're in mathematics, if you're in computer science, you are interested in this technology, you are focused on this space, you're figuring out how you can contribute, that tells you something. This is where people want to work. This is where the mind share is going to form, capital formation is going to happen, whether the US wants to take part or not, whether Canada wants to take part or not. And so the question is just what jurisdiction is it going to be in? And so that's the real question that I don't have an answer to, is will North America lean into it, or are we going to leave it to somewhere else in the world to welcome the developers and say, we're going to create clear rules, we're going to create incentives for people to build this tech and launch it there because they want the tax dollars, they want the jobs, and they want to lean into it. That's a real opportunity. But the US has a lot at risk here, because what's the future of the US dollar? And these assets are a bit of a 100%. Shoulder tap. This is a shoulder tap. Bitcoin is a shoulder tap on central banking policy.
Very.
Yeah, I unfortunately think it's going to be abroad. I think the U.S. is
Why?
probably going to fumble this. And I mean,
Yeah.
just look at what we're doing right now. We've had an opportunity for years now to put regulations in place and put some sort of framework in, paired with the fact that, I mean, some of the best and the brightest from abroad, they don't want to live here anymore. Like, America's not what it all used to be. Pair that with a failing dollar globally and also the just opacity around the regulatory nature. I wouldn't want to come here. I wouldn't want to live here. I mean, shit, I've thought all the time, where could I move abroad? I'd be going to Singapore. I'd be going to Germany. I'd be going to any of these crypto native areas that are developing, that have a stronger they have stronger tax benefits. They have stronger human capital, and I mean, things are actually taking place there. Granted, I mean, I'm not saying the U.S. doesn't have that ability. I mean, we've fostered Silicon Valley, which for decades now has been top of the tech world. We could do it in crypto. I just don't think we're going to, because the big banks and the financial system have really too much to lose if this gets too much.
Brian, do you agree with that?
Scale.
Mostly, I would say that the best quality talent, I think, currently is still very much in the U.S. The question is, will what they're building be offered out to the American consumers, or will they just geo-block people in this jurisdiction and offer it abroad?
Yeah.
Where there's really an incompatibility is there's a lot of push the gas pedal on anti-money laundering, sanctions against Russia, and there's this heavy focus on that part of the financial system through banks. Now it's going to leak into crypto. Is how do we make sure that these things are compliant? And one thing that I'm constantly trying to bring up with regulators is just to zoom out and say, understand that the more you turn up that compliance dial, you're also turning down the innovation dial. You're adding in a lot of friction. You're adding in a number of staff who may or may not know exactly how to make these assets comply. You're limiting what those assets can be used for in this global set of protocols. And that's tricky. And the US has a lead here because the quote currency for a lot of activity happening in DeFi and the NFT world, it's tokenized US dollars. That is a fantastic starting position, that there's hundreds of billions of dollars of tokenized USD that this industry wants to use. Now, we can have a separate conversation on whether they're compliant or not, or what the appropriate compliance would be. But the point is, you should be leaning into that. That's going to extend the life of the US dollar. And if they don't, and they say that we don't like this, we can't figure out how to make it comply with whatever our rules are, it will just get replaced by some other piece of tech.
Got broke up there for a little bit, but we got the last little message. Okay, so I'll leave this off then. What's the last message or takeaway, Anthony, based on the news this week last week with SVB pertaining to the crypto industry? What's the big takeaway for crypto investors?
Like I said, I'm cautiously optimistic. It's great to put a smile on my face to see the rally today. I love seeing Bitcoin up 15% while it's kind of house on fire for TradFi. So it was gratifying, but like I said, I'm cautiously optimistic. I do think Powell's not going to take his foot off the gas. If he does, then the macro is probably going to sell, or then the macro will probably sell off, because he's telegraphing that there are bigger problems than and weaknesses ahead. So it's a catch-22. I think he raises rates 0.25. The narrative shifts to they're not going to either stagnate or lower rates. And I mean, I'm curious to see how it affects. This could also be a decoupling event. Finally, for crypto. I mean, there's been a narrative that's been forming. There's been a lot of momentum for it, and I mean, maybe this is the time it decouples. I mentioned it a couple weeks back. I would like for it to be that situation. It's about time that it's happened. But like I said, I'm cautiously optimistic and
all right,
watching.
Good podcast, gents. I appreciate the information. Earlier this week was week 1 of the NFL free agency. Any surprise notes? Any surprises that caught your attention? Brian, you much of a football fan?
I mean, if we're making some jokes here and being honest, I didn't even know that happened. As I mentioned before, I host a Super Bowl party every year. It's all about food, friends, and some alcohol. But who's playing? I'll leave that part to you guys.
Yeah, I was happy that Mike White wound up in Miami. We need insurance on Tua. God forbid he gets another concussion. He's probably down for the season. So that was good to see. And then the Steelers Steelers secondary got beefed up with Patrick Peterson and Minka Fitzpatrick
Jalen Ramsey
in that backfield. Aaron Rodgers also
What did
is
they
on
get?
his way
Jalen
pretty much
Ramsey.
to New York.
Like a third-round pick,
So-
and then who? Yeah.
I love it. 3rd-round pick and Hunter Long, that was our backup tight end. I'll take Jalen Ramsey all day. He's now our number 1 cornerback,
I'm
and
just
then you got
shocked
X
that
on the other side of the field.
Jalen Ramsey could only garner a backup. He's a backup cornerback or tight end. Sorry, backup tight end.
Backup tight end. Hunter
pick.
Long. I didn't know who he was
Anyways.
until yesterday. Yeah, I'm not complaining.
Yeah,
we got
I
a
would
hell
think.
of a deal.
Brian, you're in New York. How's life at the Big Apple this week?
Little cold, but interesting walking around the city and hearing who's paying attention to everything happening in these markets. That's what's consuming me right now, and I think anyone who's probably tuning into this podcast is, what comes next in this narrative.
Yeah. Listen, appreciate you both. Check it up. Have a great week, and let's keep in touch.
Thank you.
Thanks.
Awesome. Talk soon.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.